All right, we're going to get started. Before I do, Aaron and I kind of wanted to see what was in the room. Is everybody here a consultant? Consultant? Okay. All right, we'll make sure we cater our presentations for consultants. We didn't know if there were going to be more integrators, manufacturers, or what. So I'm Wayne Dean. I'm Vice President of McGriff Insurance. Been in the insurance industry 18 years, and all 18 now with McGriff because we just bought the firm that I worked for 3 years, starting in 2002. So I'm grandfathered in to that McGriff name. We were at one time BB&T. You may recognize that name if you are on the East Coast, which I know some of you are. My colleague, Erin Walters, she is 18 years as well in the insurance business, she's with InsureTrust now. They're a wholesale broker out of Atlanta, Georgia, and that's where I reside too. And she's in Richmond, Virginia right now. And she came on to InsureTrust about 6 months ago. She's got a specialty in cyber and errors and omissions. She's a star in that field, along with being a star basketball player, and you'll see why when she stands up. So with that said, we're going to kind of go through. I do want this to be as interactive as you guys want to do. So if you have questions during the session on a particular topic that we're going to discuss, this next 45 minutes to an hour is going to be errors and omissions driven. They will overlap with cyber. So you'll hear some cyber dialogue and material, but they will go hand in hand with the E&O process. And then our second session later on today will be geared more towards the cyber liability than errors and omissions. So with that said, I'm going to flip through a couple of slides here, then I'm going to turn it over to Erin. She's going to run with the errors and omissions session. A couple of things we just discussed. We're going to talk about the day-to-day operations, the analysis, the market trends, claims, which we're going to spend some good time, a good amount of time on the claims activities that we've seen in recent. I think that'll hit home. And so incident response plans and how that relates to your business as consultants or maybe your clientele out there from a manufacturing world. Again, this is an open forum, so please ask questions. McGriff Insurance, fifth largest insurance broker in the country. We represent, we're the preferred vendor for the PSA security, which is how I met Ray and how we are here today. So I've had that relationship for the last 5, now coming up on 6 years. That's what we do. I mean, we're a risk advisor, and my goal is to implement these insurance programs on all lines. We're concentrating today on cyber and E&O and professional lines, but our firm, my team, and I put together a holistic approach from the insurance perspective. InsureTrust, they are our partner when it comes to implementing the cyber and E&O. As a retail broker, there are a lot of markets out there that we'll discuss here in a minute that we have to go through InsureTrust to have access to implement the programs that we want to implement for our clientele. I will look at this on 2017, 2019. They were listed as awarded the Cyber Broker Team of the Year, and that is a elite award for basically being recognized as the most outstanding broker in the entire world for cyber. So you're going to get some extreme expertise here today from Aaron and the InsureTrust team. So with that said, I'm going to turn it over to Aaron. And again, if you have questions, raise your hand. I will bring you a mic. And they want the mic because it is being filmed.
So first, how do, and I'm going to change this question up a little bit, but as consultants talking to your clients, how much do you get involved in talking about the insurance risk transfer side of things from a technology or cyber perspective?
Very little, if not
none.
None? Yesterday there was cybersecurity insurance. I had no idea there was a thing.
Okay. You will after today.
Yeah, we did have one client that asked us about cyber insurance, but only one so far.
Okay, so it asked you to carry insurance. Got it. Okay.
One other thing that I want to add. I haven't had any actionable discussions. Thanks. I haven't had any actionable discussions about insurance as relates to anything we're doing, but more like being put on notice of things, because I have several clients that have multiple cyber policies, because depending on what kind of coverage you're talking about and so on. And in the past, they've exempted the physical security systems from that kind of consideration. They're mainly concerned with the company data and that kind of thing. But since the physical security infrastructure can be an attack vector, then they want to make sure, they're basically concerned with, are you sufficiently protected against your security system?
Right.
But now what's happening is the insurance companies, which it seems to be changing every year, the insurance companies have said, well, these are the responses you have to make when there's an incident to have the incident be covered. And these are the things you need to do. And so then the other thing that came with that for one of the clients was, if the attack comes through the physical security system and you're not doing the things you're doing over here, then the entire incident is not covered no matter what, because of that aspect of it. So they managed to address that as best they can. I had, of course, no answers to come back with about what to do about that, but I'm interested in hearing these about all these aspects.
And we'll actually go through one claim example that's specifically related to that.
Yep. So hold that thought.
I've had two clients that, because of integrators not following the IT rules, had their servers get infected, and it caused a problem once it took out all their business systems on a weekend. But IT got it back. So they just unplugged the security from the network, got themselves back and going in 2 hours. But then there was the whole security side to deal with. So there, it was an accidental exposure, but broke the rules. So I'd also like to know if you have all the right policies and procedures in place, and if I as a consultant have said, here's all the things to do, but then the vendor, in this case the security integrator, doesn't follow those, where do I stand, where do they stand, and that kind of thing.
Yeah, we'll go into that a little bit.
That's a good point.
So technology errors and omissions coverage is coverage for failure of technology, whether it's integration of technology or technology products, that cause a third party a financial loss. So if you think on the general liability side of things, and we'll kind of talk about the crossover, that's really for property damage or to a third party, or physical harm to a third party. This is for financial loss to a third party. So any company that's using technology or selling technology or integrating technology for a third party then could potentially cause them a financial loss if there's a failure of that technology or a failure of that product. That's where this insurance coverage comes in. And we'll talk a little bit about why it's so important that your technology insurance policy and your cyber policy are integrated, because there's a big crossover between the two. So why is it important? There is a big, whether it's going to be the failure of the technology product or service that's causing the damage, or was it a failure of security that caused the third party that financial loss. That's why it's so important to have the policies integrated. If you have a standalone tech, policy and a standalone cyber policy, there can be issues when a claim comes in trying to determine who's going to respond. And if you have different policy terms and conditions, it could be covered under one and not under the other. I know Wayne had a specific example of a client that had this problem.
The challenge when it's not together and blended as far as one product with one of the carriers is a lot of our clients get these contracts in. So when you're looking and looking at whether or not you're going to satisfy that requirement, you assume that the general liability limits, which is typically in the standard market a 1 million, 2 million limit, meaning 1 million per occurrence and a 2 million per aggregate. So you have $2 million for the entire policy, which is misleading when it comes to E&O, because you really only have $1 million of coverage, because that same concept applies to the E&O on the GL policy. That's why when we're sitting down with a lot of our clients, large, middle-sized, small businesses across the country, we're looking at it from that perspective is you realize that you actually been non-compliant, and we've seen that on 2 occasions in recent weeks where they've been non-compliant because they assumed that $2 million limit satisfied the $2 million requirement. And what happens is that, one, they were sending inaccurate certificates to the job, and number 2, they only had 1 million, so they were non-compliant. So that's a big component of why we have talked to these insurance companies from the cyber world, from the E&O world, and the GL side to say this is the way that we want to write these policies because that eliminates any of those gaps. Make sense?
So talking about that a little bit, financial loss is usually excluded from your general liability policy, so you can't rely on that to cover you for a professional service failure. So if or a failure of your technology product in a lot of cases, that's why a tech E&O policies exist in the first place. It's because it's not covered under GL, or it's not supposed to be covered under GL. So if the product fails, the technology product fails, like I said, or there's just negligence in implementing the technology, negligence if it's software in the code, whatever it might be, it could be human error. That is what's covered under the policy if it causes that third party a financial loss. The exclusions regarding electronic data access or disclosure of confidential information. You're going to see a lot of these exclusions, especially more in the coming year. Some people didn't even know that cyber insurance existed, but there's a big concept of silent cyber, meaning that people are trying to find coverage in other policies because it's not specifically excluded. And you're going to see a lot more specific exclusions because for both technology, errors and omissions, and cyber, because the other carriers do not want to, or the other companies do not want to cover it. That's not what they're there for. In some cases on the technology side, you can get a carve back for bodily injury coverage if your failure of technology is what then led to bodily injury. So it's not the technology itself that's causing the bodily injury, that would be under GL, but if it's the failure of the technology that somebody got hurt by. So because the technology didn't work, somebody suffered bodily injury. So that can be picked up. It's usually sublimited, but it is possible in the market.
And these are the conversations that as a consultant you're having with your customer, whether it's a manufacturer, whether it's an integrator. So this applies more to that end, but for a consultant, obviously the errors and omissions exposure still exists in your world because obviously you're giving professional advice on how maybe these things are a gap in coverage, or how from a contractual standpoint, if you're reviewing contracts for your clients or doing engineering work for your clients, this thing might apply to you as well. So it's important to understand the advice that you're giving in regards to this, and also taking it in on your own exposure. Let me get this.
Can you give an example of a case where a consultant or an integrator might have a situation where this actually applies?
Yeah, I've got multiple claims examples towards the end that I'll go through, and there's exactly those types.
Yeah.
I think you actually answered my question, and that is, as a consultant, where we do not manufacture any equipment, we do not sell any equipment, we do not install any equipment. How does the tech part of it apply to us? And I think what you're saying is really it doesn't, but since we are designing the layout of equipment,
Sure.
if it's the layout of the equipment that may provide some vulnerabilities, some gaps, if we don't put a camera where there should have been a camera, or we don't specify that a camera should be put somewhere where it should, then maybe the tech side may apply to us.
Right.
Is that what you're saying?
I would say that it's from a tech, it'd be a combination of a tech and miscellaneous professional exposure. So anytime you're providing advice to others for a fee, you have a professional liability exposure. So whether it's tech specific or it's just general professional liability, you have that exposure. So I would say for consultants, for yourselves for coverage, it would be more the miscellaneous professional with a tech component added on, endorsed on, to cover all of your consulting services. So therefore, if one of your clients came back and alleged negligence, that you did not perform your services or you've neglected to do whatever in advising them, that's where your policy can defend you and protect you.
And more than likely, all parties will be brought into the suit. I mean, that's what we see. I mean, you're looking at the integrator who we brought in from the physical standpoint. You'll be brought in from the more professional standpoint, and then the manufacturer would be brought in potentially from the manufacturing E&O, which is another topic. So there's really three components, as Aaron just mentioned, that could potentially happen in one scenario.
We're here from the manufacturing side. I was hoping you could define the carve back, but then also what happens, and you may touch on this later, but in the event that someone tries to circumvent the technology from the way it's meant to operate, and they receive bodily injury by trying to do something, push through or get through a physical barrier and not operate it the way it's intended to be operated.
So that's a third party. They're not using your product in the way that it's intended to be used.
And it results in an injury.
Like somebody that's in a turnstile and they're trying to defeat or break the door or whatever, and in the process they
Break it.
are injured.
So I would think that would be under GL.
Yeah, I was just about to say, it's going to be a combination potentially of GL we would file a claim under the general liability policy, and we would also file it under the E&O. And then based on the evidence, whether or not there's negligence involved, who would pay on that behalf of the client. So it's kind of, insurance is always going to be in a gray area sometimes, as everybody I think is well aware. So it's about finding the facts and finding out what is not covered versus what is covered. I think that's kind of where we typically start from the E&O perspective. But I think you filed under both the general liability and the E&O.
Yeah.
To answer your question.
So if you only add GL, so that's a case where E&O would be very important.
Yeah.
Right.
And for a manufacturing side, a lot of times the GL can be written a little differently than from the integration and the consulting side, because there's actual physical property, tangible property that's being sold or distributed, and being installed. So therefore, the E&O can sometimes be built into, or it's really an enhancement. It's not built into the GL. It's just an enhancement or an endorsement that's added on potentially. I will say all the large manufacturers that I handle, we write a separate manufacturer's E&O policy. We write it completely separate with a different deductible, with the different terms, just because I want it to be clear between what is covered under the GL from bodily injury and property damage and what's covered under the E&O.
We got 2 questions. And I'll get to the card back in a second. Let's get to these.
Excellent.
I had one statement, one question. Where I'm seeing the E&O is that I've got a customer, it's a citywide surveillance type application. They called for consultants. The first thing they said is, hey, here's our requirement for insurance. As a consultant, you're going to carry $3 million E&O. I sent him my insurance guy and said, okay, I know I've got professional liability. Do I have E&O? He says, yes, you do. But then the question then becomes, so that's where I'm actually getting mandated that I'm going to carry E&O, and actually higher than what I had expected to ever carry, but I get where it's coming from. But the question is, I have E&O, but is E&O covered as tech E&O, or is E&O, that professional liability E&O, is that separate from a tech E&O?
So if you have, the only way to know would be to look at your policy. But if you have E&O, it could be a combination of MPL, consulting E&O, and tech E&O. It's just how the policy's written. So it's
And your services too.
yeah, and in the contract, it's probably just going to say professional liability. I definitely would ask the question of your insurance guy. Is tech included? Is it both tech and consulting E&O that's included?
And the biggest challenge, and I don't know if we were going to get to this in a second or not, but the biggest challenge for not only your customers, but you as a consultant it's all about risk transfer. What it is the top down pushing as much coverage down as they can so that they can transfer all the risk to whoever, telling them contractually to do that. So you've got the big boy that's bidding out a job. Duke University is an example I was going to use. They get an integrator to come in and do the systems, whether it be access control, whatever it may be. They push off all those high limits onto the integrator, which at that point, from a consulting standpoint, you're kind of in the same mix. So any services or any other professional services being provided has to carry the same thing. So it's all about being pushed from a risk transfer standpoint. The challenge that we're faced with our clients is subcontractors. So now the integrator has a subcontractor working for them that doesn't carry any, They do all the work. Now it falls back on the integrator and the consultant, because they didn't do the work and nobody at the top of the integrator is pushing down in a subcontract language to the third party. So we have been yelling, screaming at the top of our lungs that any kind of subcontract agreement with our clients, we need to see it. We need to see what language is in there, and we need to see what you're requiring of your subs, because they're the ones doing the work a lot of times. You're not, and you're taking the brunt of the punishment. Now, same thing on the consulting side, and it may be that you guys need to evaluate what you're asking of your clients too. Make sense?
That's more questions.
Thank you. Just one comment on what you were saying about the level of the limits. We've had clients ask us for huge amounts of limits, and we have always pushed back on it, and always successfully. We've never lost a project because of it. And when your limits go up, it's not just for that project, because you can't bring it back down again for the next project.
Right.
You're stuck up there.
We can, and certain for E&O, you can do contract specific. So if you have, a large entity, that the Googles or those types of client, they're not changing the requirements, period. So you can do contract specific. Given depending on what the size of the company is, a lot of times it doesn't make sense because the difference in cost isn't material between just covering the whole entity for everything and that one specific contract, but it is something that can be looked at. But he's right. Once you take your limits, you're paying for those limits for the year. But they can be changed on an annual basis. I don't recommend doing that either. But
and to your point, benchmarking what others are doing. So we've been able to show some benchmarking results for what everybody else in the industry as the preferred vendor for the PSA. I've been able to take the 60 or 70 accounts that we have for the PSA and be able to show, other situations for other integrators that, hey, this is our top PSA client is about $180 million in revenue, and they carry $25 million in cyber coverage, or blended cyber coverage. You're asking a $5 million organization to carry $25 million. The margins don't work.
It doesn't work.
So we've been able to show that and show the history and show the claim scenarios that, hey, based on this, the claims aren't exceeding $5 million. And
a lot of time in the market, insurance market itself, they're not going to give that much limit to a smaller company.
Right.
And so we can always push back and advise our clients to push back on limits. We do that all the time as well. We'll say, go back, see if you can get them to cut it to this. And most of the time they will. It's just a matter of asking for it.
And please don't assume the umbrella covers it, because
the umbrella does not cover it.
It does not cover. And we get so many contracts in and they go, well, I have $5 million umbrella, so that should work, right? And I'm like, no. So, just make sure that you're, at least if you're having conversations with your broker or your client, that they're getting the right advice.
The other question I had was, I'm starting to do a lot more expert witness work. Mm-hmm. Is that covered under general EEO, or is there a special requirement for?
So that's usually covered under a miscellaneous professional type policy. E&O and professional liability I'm using interchangeably, but that's usually covered under that type of policy. It's under a miscellaneous professional policy, your scope of services that you provide are defined. And that's something that you, as the client and your insurance broker, come up with together to get the carrier to agree to. So you can define it as detailed as you want, make it as broad as you want, based upon whatever services you're providing your clients.
And we use an application for ours, for our clientele. And I'll show you that afterwards if you want to see one.
I was curious, can the client mitigate any of the risk and reduce their premiums? Is there any way that they can do certain things that will allow their premiums to be adjusted downward? Certain things that best practices for the industry or so forth?
So there's definitely best practices, and I'll go into that a little bit. From a premium reduction standpoint, the market, unless you're a large tech right now, the market's relatively soft. So premiums are, and it's very competitive. So to get anything meaningful, most likely not. Tech, is rated off of your revenues. So being able to adequately break out where your revenues are generated from, that's important because there's higher risk classes of business that they have raters for, the carriers. So being able to delineate where your revenues are coming from, that's an important part of the underwriting process to make sure you're getting the right rating.
The blended product, David, is where we do see premium savings because the bulk of these premiums come in the area, and so when I send a submission to Erin for her to get it and send it out to these markets and underwrite it, we're seeing that buying a separate E&O and a separate cyber is more expensive and less comprehensive than blending those two products together. So that's just an idea from a premium perspective that we see.
Yeah, it's always better to buy higher limits because as you buy higher limits, it gets less expensive as opposed to putting two programs in separately side by side.
And then if there's enough time for it later, I'd like to hear about the contracting aspect of it in terms of things. So from a corporate liability perspective, we always make sure that there's an acceptable use policy for the technology system so that the people are trained on it and tested on it and everything else. So that if they do something wrong, then the employer doesn't have the liability of not having said that's wrong. Otherwise,
right.
On our side, I'm interested to hear what you have to say also about scopes of work in a contract because I'm not sure we've been diligent enough in what's not in scope specifics, and a lot of times the client determines our scope by saying, here's what your scope is. Well, when they're doing it, they're also saying, here's what else isn't there. But if nobody is saying that, I think that there's a little more CYA we could be doing, and I'd like to talk about that if there's time.
Okay, sure. I have a slide on contracts. So we got another question back there.
I'm not doing my job.
Would you talk a little bit about the category we should be under? Because none of us have a real category for consultants. And so periodically, working with our insurance agent, we look at what are the rates if we're categorized as an architect or an engineer or an installing company. And so there can be vast differences in the cost of the premium, but there also may be vast differences in the type of coverage you actually end up with. I remember one policy where we'd filled out the whole application, and when the policy arrived, and I always read them because they list what's excluded, and it excluded everything we did. And so I had to get back to the agent and say, this
Minor
is not going to work. So I'd appreciate it if you would address that.
Yeah, so I think that's just a really important conversation to have with your insurance broker, the Waynes of the world, who, in conjunction with the me's of the world. to really talk about what you're doing, and describing and crafting that scope of services up front, so that when we go to market, we can talk through that with underwriters. And honestly, your insurance broker should be reviewing those exclusions to make sure that they're not on there. That's what my job is. Yeah. So that's part of it. It's really just having a knowledgeable broker to be your partner out in the market.
I will say this. The reality is a lot of the brokers rely on the carriers to tell them that. And a lot of the carriers they're underwriters. They're not selling. They don't know how to articulate that. They understand the coverage, but they're just taking it in underwriting. And if the premium's $10,000 and excludes everything that you do, that's not on the carrier, that's on the broker. So there's a disconnect there in a lot of occasions between the broker and the carriers. My advice is just make sure when you're going through that process from the application perspective is to identify questions on there that are relative to what you do. We try to, because we ask the questions, I get consultants that come to me all the time. We'll get questions, what do you do? Are you, you're not an architect, you're not an engineer. Okay, so you're just a more general consultant. Well, there are applications out there for specific companies that do just general consulting. So we try to identify that before we send in just a general architect, engineer application. You fill it out, and the first 3 pages, even though they're cumbersome and they're long to do, have
nothing to do with what they do.
So,
are you being recorded?
Yes.
Do you have your own mic?
Yes, we are.
One thing I wanted to mention with mine was, I'll try to talk about, is the, consultants, everybody's got something a little different, right? Mm-hmm. And so, like, for me, North Carolina, I have to carry, to be a security consultant in North Carolina, I have to actually carry a low voltage electrical license. Mm-hmm. So as soon as I said the word low voltage electrical license,
you're contractor.
I'm now contractor, consultant, project. I also do project management. So for the broker was like, hold on, you're no longer in this category. So it also depends on what licenses you hold, not just as a contractor, but other professional licenses you hold. That also plays into how they broker the different policies, because it's not for me, it wasn't what I do, it's what I could potentially do. Mm-hmm. I could potentially today flip this thing and become an integrator overnight. Not going to happen, but that's what they had to plan for. You've got to have enough insurance that if you flipped it, it's there.
But I think it's important, and just to that regard, is making sure that your broker understands that, so that they can properly articulate that to the carrier of they are required to carry this license. They do not do any of this work right now. They're not intending to do any of this work right now. If they do end up doing this work, we'll let you know, type thing. So you're not getting rated for that on at least on a full level, because if an educated underwriter understands that, and I will throw that out there because there's a lot of underwriters out there that don't know what they're doing, then they'll take that into consideration and knock that part of your rating down.
Yeah, I agree with that.
So, and to answer the BIPD carve back question that Tom had earlier, so the best example I can think of, especially in y'all's space, is alarm system. Integrator puts alarm systems into homes. There's a failure of technology, the system doesn't work, 911's not called, and somebody's injured. The alarm system didn't cause the person to be injured. The failure of the technology of the alarm system caused the person to be injured. So that's where that carve back would come into play.
Yep.
Okay, so these are some of the things to look at. We talked about exclusions, make sure it's not excluding everything you do. Is the coverage enterprise-wide? Is it covering all of your operations? If you have multiple different LLCs or subsidiaries underneath your parent company, is everyone covered? That's important. Are you covered for both breach of contract and negligence? And I won't get too into the weeds of this. This is an E&O debate that has gone on for years. But most E&O policies, whether tech E&O or miscellaneous E&O, are negligence-based. So somebody has to allege that you were negligent in providing those services in order for the policy to be triggered. There are a few covered carriers out there that provide just breach of contract. So one of your customers doesn't say you were negligent, they're just not happy with what you did. So there are fewer out there. They're a little bit more expensive because it usually just comes into the defense cost on that. But that is something to ask your broker: am I negligence based, or is it a breach of full breach of contract coverage? Are there exclusions for delays, wear and tear? And if you've got anything involving software, is software copyright infringement covered? There's a lot of exclusions in even tech E&O policies for that, and it's easily carved back. So if you're doing anything with software, you want to make sure you have that coverage.
Yeah, and I want to make one more little comment. So this is an example I had the other day. A group in, actually it was in New York and New Jersey, called us, wanted us to look at some stuff for them. They were they had just switched E&O carriers, and they had placed it back in their GL policy. And the policies went from a claims-made policy back to an occurrence policy. The broker didn't explain that to them, and I was trying to explain to them that the retroactive date that was on their policies dating back to 2000, I believe it was like 12 or 13 when they first originally bought that policy, is now in crisis mode, because there's coverage that could be excluded at this point, dating all the way back to the work being done back to 2013. So I don't want to get into the weeds necessarily of what a difference in a claims made and occurrence policy is, but you need to ask that specific question, or at the end, I'll leave some cards and you call me and go, I don't know the difference between what this policy represents, but you're supposed to be buying tail coverage if you go back to an occurrence policy. So it's crucial. And for this client, luckily, we're able to get the carrier to commit to going back to the retroactive date with the help of some people at Insure Trust. So that was just something that came to my mind, and it's something you need to ask.
Yeah, and what he says that some companies package their tech E&O with their general liability.
Right.
So that's written a different way than a standalone tech E&O or E&O policy. So contract review, someone asked about contract review. Contract review is critical, both from what you're requiring the entities that you work with carry to make sure that you're protected for whatever they're doing, and also what is being required of you. So some of the common requests that we see are, additional insured language, waiver of subrogation, that the policy is primary non-contributory, and we talked a little bit about contract specific for high limits request. The way the market is now, every carrier is capable of doing these things. You will get some brokers, you'll go to your client or the vendor you're working with and say, this is the language I want. And they'll say, my carrier says I can't do that. Tell them they're wrong, because every carrier out there can do it. It's a matter of whether they want to do it, not the carrier, but whether the client, they might be pushing back on you saying, I don't want the policy to be primary non-contributory. I don't want my policy to be responding on your behalf. But these are the most favorable language for you to be requiring of others, and then you'll also see it be required of you.
It's in about every contract nowadays, unfortunately.
And that's one thing, that we do. We do contract review on a daily basis for our clients, and also provide, preferred insurance language for our contracts.
Yep.
And we talked a little bit about scope of services. From an underwriting perspective, one of the things underwriters ask for on the E&O side is a copy of your contract. So they're going to ask for a sample copy of your contract so they can see what you're providing out there and being held contractually to comply with. All right, some claims examples. I think somebody asked about this specifically, but With ADT, what happened, there was class action lawsuits because ADT failed to disclose that their devices were unencrypted and were vulnerable. So they were vulnerable to attack. They didn't tell anybody. They didn't fix it. And because of that, they had a $16 million class action lawsuit for not disclosing that their systems were unencrypted. So that's one where, is it tech E&O, is it cyber? Because the losses happened because they were unencrypted. But it was a professional service that ADT was providing these unencrypted devices. So it ended up falling under the tech E&O side of things.
Let me ask you a question to the audience. Is most of your clientele asking and requesting you to see contracts and review contracts in terms of, or applications in that matter? So you're just, from the physical security standpoint, that's the advice that you're given for the most part? Is that accurate or?
Yeah, it's rare that we're asked to look at those contracts.
Okay.
And the contracts are typically with our client, not
Right.
with us.
Correct. Okay. I was just curious to see how many would.
So what was your question?
The question was, when the integrators or a manufacturer is given a contract for the work or that they're going to be doing, where in terms of the consultant do you play a role? Is it the fact that they allow you to look at the certificate, the contracts to make sure that you're giving them the right advice? Not so much from an insurance perspective, but just are you seeing anything in there that is outstanding that you see could be an issue?
No, generally they're contracted by the general contractor. We never see them.
I was just curious. It was.
So for the longest time, we've experienced the same thing, but in the past year, we've had clients come to us and say, and want the terms and conditions of the integrator's contract or proposal or whatever it happens to be called. Does this look okay to you? Because our attorney is questioning some of these things, and usually it's always been between their attorney and the integrator and their attorney. But we have a project that's been held up for 3 months now because the city attorney can't get an acceptable contract from an integrator. And unfortunately, in the area there are not many choices for integrators. Is that the kind of thing you're asking about, or are they asking
I was just
in on what's?
We review 90% of my clients send us majority of their contracts. Some of the smaller businesses will not have inside counsel or have an attorney on a fee that they can use, and so they just kind of take a chance, take a risk, and just typically not deal with. They just sign the contracts and send them, quite frankly. But some of the other ones, I didn't know how much a consultant would be involved in that process, not necessarily on the insurance due diligence, but just in general, reading these kind of contracts and what scope of work they're doing, what your advice is for these guys, or is it really between you, the manufacturer, and the integrator when it comes to that?
So for the longest time, our only involvement has been specifying the terms of service. Emergency services, so many hours or days or those kind of things, preventive maintenance and all that kind of thing. But the terms and conditions, I've never had anybody bring that to us, but it's happened 2 times now. And so I don't know if that's the beginning of
it could be
or what.
We'll see.
In most cases, we're telling the integrator, don't even bother to send in your terms and conditions. The client will dictate the contract.
Right.
And then they can negotiate it. But it's very rare that we will see the client accept the integrator's terms and conditions.
It's good information.
Yeah, that makes sense.
I don't get a room full of consultants all the time, so this is good. This is good information for me too.
Related, but not direct to your question. We always.
Thank you.
when we're signing a contract with a client, we always send the insurance-related portion of that contract to our agent for review before we sign the contract.
Yep.
Yeah. Highly recommended.
Yeah, definitely do that.
Unlike some of my clients that like to sign contracts and then send me the terms and conditions and ask if they're compliant. So that's always fun.
That's a lot of.
I'm like, you agreed to what? So another, a system integrator providing hardware and software services. During installation, malware is inadvertently, not intentionally, upgraded into the client system. Which caused a network shutdown and loss of data. So the client came back against the integrator for those costs. Again, you think, all right, it's malware, so it's cyber. It's not. It was the performing of a professional service that caused that to happen. So that's where the tech E&O comes into play. Maintenance services for accounting software applications that are specifically focused for retailers. An audit reveals that several journal entries were misclassified as a result of an error in the software. The problem's corrected, the customer incurs significant fees due to the misclassification. So they sue them for those damages. Again, this is just a code error that ended up causing a financial loss. So back to E&O, professional liability, financial loss to a third party. That's where you're looking for this coverage.
So
Who had that liability? The company that made the software that miscoded it, or the consultant or salespeople that actually sold it? Because that's probably two separate parties.
Right. So my guess in this situation is that the reseller is going to get sued by whoever they installed it to, and then could then again subrogate against whoever developed the code. So it's going to eventually get back to that point, but the retailer doesn't care about all the people behind that. They care about who they contracted with. So that's who they're going to go after.
And just for your information, subrogation in these kinds of incidents can take a long time. I mean, they're months to years. So it's a grueling process once the installer or integrator gets sued. But then again, you got to read contracts.
Yeah,
and who's risk transfer, who's primary non-contributor, who's waiver subrogation. There's a lot of,
because if there's waiver subrogation in the contract, then you won't be able to subrogate against them anyway.
Yeah, there's a lot of language that affect the outcomes of these claims, and subrogation for that matter.
Yeah. All right, so Adobe pulled down a form of users of its video conferencing service, Adobe Connect, after a hacker successfully compromised the server and downloaded information of 150,000 members. The information was taken, name, username, company, title, email address, password. In a statement posted to Pastabin on November 13th, the hacker, who claimed to be Egyptian, said that he would publicly post only the information for Adobe employees and users that work for the U.S. Department of Defense or other government agencies. So again, this is a cyber incident because it's a hacker that's coming in, but it's Adobe's a professional service firm providing these technology services. So that's where the tech, that's why you need that professional service. If you had a standalone cyber policy, a lot of times you'll have an exclusion for professional services. So that's what you got to make sure, and why we highly, highly, highly recommend you have an integrated product, because it's the most efficient. Another video conferencing hack in 2016 hacked the video conferencing software used by Quebec Liberal Party and shared the news with the media. To expand upon the video conferencing breaches, hacker HD Moore created the Metasploit and Chief Security Officer at Rapid7 has found that the video conferencing equipment is often left wide open for hackers to creep in and peep around organizations. Think about, boardrooms with video conferencing capabilities, and if somebody's able to watch everything that's going on in a boardroom and listen to it. As described in a report by New York Times, Moore has demonstrated how he can remotely tour a dozen conference rooms around the globe via nearly ubiquitous video conferencing system. He's let himself into several top venture cap and law firms, pharmaceutical, oil companies, and courtrooms. He's made into the boardroom of Goldman Sachs as well. So think about, from that perspective, the video conferencing software not being encrypted or protected, being vulnerable, any loss of corporate secrets, trade secrets, whatever might be going on that ends up causing them a financial loss can all be tied back to this. So again, that's in the tech, professional liability space.
And again, buying it separate just gives you so much more coverage. It really, you can implement it the way that for the services that you provide. And the GL, they just don't give you that many options. Typically, it's already included and sometimes even sublimited, depending on the GL carrier, general liability carrier. Yep. Oh. Behind you.
I was just confused with the last one. You've got a hacker who's also the chief technology officer for Rapid7, and he's gotten into the Mr. Moore, who's gotten into all these different places that Hacker HD Moore, creator of whatever, and chief security officer at Rapid7, talks about the video conferencing. Is he doing this as a consultant to?
Yeah, I think he was trying to demonstrate that how easy it was to get in to these.
Because I'm like, unless he's being contracted by each one of those,
right?
your insurance is out of the question. Yeah. He's going to jail.
Right. Yeah, but I think it's just to put the point of the vulnerabilities in the technology, that whoever's installing that technology and not doing it in an encrypted way or keeping them protected could be vulnerable to this type of loss.
And well, as another note, that the problem that we run into this industry is that video conferencing guys are AV guys. They know nothing about cybersecurity. Our security integrators know nothing about cybersecurity as the guys in the field. And so there's a whole new trend that's now going to have to start coming about that we as consultants are going to face, is the fact that the guys putting this in have to now hold some sort of understanding of what cybersecurity actually means. And right. I can tell you the AV guys, they're going to plug in an HDMI cable and they're going to walk away because that's how it works at my house. So it obviously it's going to work here.
Yep. No, I agree 100% on that.
Yeah.
We've seen that.
100%.
And part of a lot of the integration business, we're seeing the AV come into that space and vice versa. It's just the AV guys. I mean, when we're talking insurance specific, when they called us to look at stuff, to do a review, I mean, they don't even carry, some of them don't even carry E&O because they don't think they're vulnerable for that. And what exposure do I have? And we can easily tell them. And then cyber insurance, they don't carry any cyber. So, the next session we're going to do here at 10:30 is going to be in regards to cyber related incidents and language versus the E&O. But again, the two products are going to be able to blend together, and we'll show you that.
So a couple last points, and then any other questions you'll have. Just the key takeaways, key points when it comes to purchasing your own E&O insurance or consulting with one of your clients that's asking about it, is that definition of professional services, making sure that it's broad enough in scope to cover everything you might do. And on a claim side, well, obviously talking to your broker about what you do and reiterating that you don't want that stuff excluded, or you want to know what's excluded, because you shouldn't have to be the ones reading the policy to find out that nothing's covered. So that's an important conversation to have. But from a claims perspective, probably one of the biggest times we see something denied is because a client got an email from an insured got an email from an upset client that said, you did such and such wrong, blah, 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 blah. There's no actual lawsuit yet. But in the policy, it's really important to understand what the definition of claim is and what the trigger of the policy is. Because once the policy's triggered, a clock starts ticking. And if you don't report that claim within a certain period of time, that's where we see the biggest denial of claims, is for late reporting. So I would say any type of incident that you have that gets back to somebody that actually knows that you have a policy, that you talk to your broker at least about it, if not just report everything. You won't get dinged, unlike some insurance that if you report something, you get a higher premium. Carriers actually like you to report things because they know you're going to have instances that turn out to be nothing, but they'd rather know that you're diligent about responding to those incidences. One of the parts of the underwriting process will be, what is your escalation process for when you get complaints? So who's handling that, and how is that going up through the organization?
And that goes back to David's point earlier about premium savings. That's even going to cause an insurance company who's going to evaluate your risk the next year to see a claim on there that you reported 45 days, 60 days, 90 days, where I have to go explain to Aaron and the underwriters why they reported it late. So that kind of affects the premium. Yes, ma'am.
And so, to the point that you just made,
Well, you got it. Yeah. We hadn't worked the system perfect yet.
So we had a situation where we got named in a case. It turns out we were actually the solution, not the problem. But we did that. We contacted our agent and they contacted the carrier. But we got charged $2,500 because the carrier opened a file. So is that something that I could have fought?
Yeah.
Okay.
Depending on who your carrier is, but
We don't get sued very often, so
I've never had someone charged for reporting a claim.
yeah. Well, that's
There's
exactly
probably a
what happened to
deductible
us.
involved, and they said until your deductible's met, we're not going to touch you. I've seen those cases before. However, that's not typical.
Yeah.
And most policies have conditions in them that you can report circumstances, even if they aren't claims yet. You have a feeling that something might go sideways, just to lock it in under the policy. But you shouldn't be getting charged for that.
Yeah. So our experience was we did get charged
Yeah.
for that. We were removed from the case because we were the solution.
Yeah.
But
But you were at $2,500.
that was seen as a penalty to us.
Typically, you get, again, the blended product of cyber and E&O. We've had cases recently with integrators where we don't know if it's an E&O or cyber, so we turn it into the same carrier, and we get hour, sometimes 3 hours of free or complimentary consulting with the forensics people or the
Breach
attorneys,
coach, yeah.
breach coach. So before we even get into the cost aspect of it, deductibles or even coverage related, we get that consultation right out of the gate. And that's always huge to mitigate and minimize as much as you can on the front end.
It also might be if you're, packaged with your GL. Some of the package carriers might have those provisions because it's more
Possibly.
in that world. But if it's a standalone E&O product, it shouldn't have that. You shouldn't get dinged for that.
Not until they start paying on your loss.
Yeah.
I don't even know what policy it would have been covered.
Yeah. Yeah.
All right, well, this was our last slide, so don't tell Ray we let you out early, but if y'all have any more questions, or stick around for the 10:30 session if you
I
haven't
think it's
already.
10:45.
Oh, 10:45, sorry.
Yeah.
10:45. The cyber risk we're going to talk about.
Yeah, we'll go into a lot more detail in the cyber world.
Yep.
And for any manufacturer who doesn't think they have cyber exposure, you're wrong.
Thank you.
Thank you.